Happy Monday. Welcome to a mortgage guide update for the week of February 12th. Taking a look at the markets, just kind of going back and forth. Had some favorable action today, but moving back and in the other direction. The 6% coupon only up 2 basis points now, and so we just continue to kind of be in this range here. And same with the Treasury, had moved down a bit, and now only down 1 basis point, so almost back to where we started. So it's a little bit of a calm before the storm, I think, because of the week ahead. We've got CPI coming in tomorrow, as well as PPI, wholesale inflation, and consumer confidence both coming in Friday. And there are 8 Fed speakers, 6 of whom are voting members. So could create a lot of volatility this week. I think in the longer picture, it's really more of tomorrow we should see the inflation coming down from headline inflation 3.4 to about 2.96 is the market expectation, so probably be reported as 3. If they report shelter correctly, which I don't anticipate, they may come in more at a 2.93, which would cause some moves to go from 3.4 to down to something that starts with a 2. But 8-month inflation has been down in the lower 2s, and I don't think that's something that they're looking at. And the lagging shelter is already baked in, and it's just continuing to take shape month over month. That's already going to happen. So I think we're going to see some drops. You're not expected to do a rate drop in March at the March meeting. However, if they don't, I think they'll be cutting more deeply, possibly in May, because of the catch up on that. Once these months start to roll off, we'll find ourselves there more quickly at that 2% target inflation. Of course, those are a few months off, and what I'm seeing now is for folks is the car payment. For folks around here, the car payment's getting in the way because we do have the elevated rates. We will continue to see the expectations for continued home price appreciation, and so even some rate relief over the next couple of years isn't going to help so much with the size of the mortgage payment. And when you add in where the car payments have gotten to, even one car payment, it's really hurting folks in a number of ways. We're seeing this take shape in 3 ways. It's driving the debt ratios high enough to where we're getting scrappy around it and really trying to make sure that the picture can run through the automated underwriting system at least under 55%, and that's making us go FHA, which is causing several $1,000s in upfront mortgage insurance to be added to the loan, which is driving the payment even higher. But in order to keep the rates down and the mortgage insurance manageable because of the high debt ratio, that's also causing another situation where some folks, even if they do qualify, sometimes are feeling like, wow, this is, when you add it all together, and there's usually not just a car payment out there. There are other things too, and they're starting to feel like, well, there's a lot of payments that I've signed up for. For other folks, it's pushing them into the 60% debt range and higher, and they're realizing they can't buy right now. And so it is causing some real challenges for folks out there too. And I was taking a look at this. This is a see if I can get to it. The average car payment. This is a NerdWallet article from the 5th. $726 monthly payment. In my experience, that's what I'm seeing. These $500, $600, $700, $800, $900 car payments. I guess it's reported that about a third of them now are over $1,000, but seeing a lot of these around the $600 and $700 range, and that's a huge impact to what they can qualify for, and it's making all of the difference. And this is, of course, a lot of times people buying that new car and financing quite a bit and ending up with the payment. And I will tell you this, in each one of these situations that they're running into it, not one person has said, you know what, fine, I don't want the house. I love this car, this $800 payment, I'd do it again. Every single time they've said, I knew I shouldn't have done it. I'm sharing this because we're going to want to continue to help people throughout this year, the end of the year, next year. And when you think about, that's going to be on us before we know it. And when you think about people wishing that a year ago they'd taken some steps, maybe it takes a year to, is there a car to just sell and get out of that loan and buy something that gets you from A to B now? And maybe even saving up enough or half as much as it takes to get a quality car that no one's gonna be embarrassed to drive around that costs $22,000 or $25,000, something like that. Even just financing half of that, financing 10, 11, $12,000 is a huge difference, and would lower that debt ratio significantly. But we're having folks kind of do it backwards, where they're financing these huge payments on cars and then trying to save up for the bigger asset, the one that actually appreciates, the house, when they should be saving up enough to buy something that's going to work for them from a car perspective. They do want to be a homeowner, and then that's where they can afford the bigger payment on the house. Check this out. I'll end with this. But as you're having conversations around affordability and helping people plan ahead, this is something I think we can head off now. Again, people can sell the car now and just get out of that loan. That could be an option. But some folks it's going to take a little bit, right? And if they want to buy, then let's get them on these steps now so they can buy at the end of the year. They can buy next year too. But just taking a look at the qualifying amount on a 30-year fix with a 7% rate, going all the way up to a 45% debt ratio. And we're just assuming, to compare apples to apples, $175 in mortgage insurance, because likely most of the time not coming in with 20% on some of these loan amounts. But with no other debt, and this is what my wife and I have personally done, and why we've been able to buy more house than we probably should have, or is just because we didn't carry any other debt. We decided a long time ago, no car payments. We're going to buy, quality used cars that are decent, good-looking cars, but we're going to save that for the house payment. This is $120,000 household income. To meet that debt ratio would actually qualify for about a $571,000 loan amount. But look what happens. You add that one average car payment, no other debt, and just one car. Let's assume the other one's paid off if it's a two-car household. That goes down $109,000 in terms of the loan amount, $462,000 loan amount, thereabouts. You add in something a bit more realistic with just a $350 in student loan on top of that one average car payment, $100 in minimum payments that show up for a credit card, and that loan amount goes down to $394,000. Quick look at what's listed in Kitsap, and you see that 450 is really that minimum amount. And with these other payments, we're not seeing a ton of money saved up as well. So where does that gap come from between 450 plus you get your closing costs and only being able to do about a $394,000 loan? And that's where people are finding that they've made other choices that are preventing homeownership. But we can help people who are looking to buy in 6, 12, 18 months take some of these steps now to get really some of these wants off the table and focus on the needs, the things that will really help them buy a home and be able to invest and build equity and net worth over time, instead of these things that are kind of dragging on that and preventing that dream from happening. So a thought to leave you there with. I think that's something that we can really help people and widen the pool of people that are qualifying in the near future, even as home prices appreciate. Have a good week. Let me know if there's any questions. And these are great conversations. Send anybody my way that I can help walk through and start giving some financial guidance to, so they can be prepared to buy and to start looking and be pre-qualified when the time comes. Have a good week.